Hi, welcome to this video, which is on the 11th of June. It's Tuesday. We're just going to be looking at a simple Forex trading breakout technique. Now, breakout technique itself, very simple to understand the logic of the logic behind it and why it works. And with the breakout technique, it will normally give you fantastic risk to reward. Now, I'm going to look at it in relation to GBP CAD today. Now, in terms of at the weekend, I did a video on GBP generally, GBP USD and GBP AUD I featured, and felt the GBP would go up, especially on the AUD. It's gone up a little bit on the USD, but it's really started to gain traction to the upside on the AUD. And GBP CAD looks like it could do similar. It's just poised now, waiting to break out, in my view. So we're going to go through the entry technique, how and why it'll get the odds in your favour. And we're going to go to the charts now and take a look at them. Actually, I'm going to update GBP AUD after I do GBP CAD. But in terms of the charts, we'll look at them, but keep in mind it is my view as of right now. It can change in line with the market conditions if you want. All our trading techniques are daily, technical and sentiment analysis of 14 major Forex pairs. You can get live access to our member centre on the link beneath this video. Right, let's go and take a look at some charts. Right, we're on the British pound Canadian dollar daily chart. Obviously a big fall down. I'm looking for most if that decline to be retraced, and I'll go through my logic of why in a moment. But in terms of when you see my trade entry to target, obviously if we get to target, is 5% in terms of a move. That's with no leverage. So just 2 to 1 on this trade could possibly give you 10%. Obviously, it's got to come right. I'll explain the logic in a moment. But the risk on it, you'll see that in a moment as well, is really, really low. And when you get a big sell-off like this, why did it occur? Why is the pound so under pressure? Well, you just look at Brexit news. I'm sure everyone watching knows that. The market has sold the pound hard on the basis that, Brexit, there's going to be a no deal. The odds of that are high because the new UK PM will not be able to agree with Europe. So the UK will tumble out of Europe without a deal. That's known and discounted now. Okay, it was really known and discounted here. Okay, but we had a run on, didn't we? Why did we have the run on? Because the market started to anticipate events that are just simply not going to occur. And I'll just give you one here. You can check my previous video for the full background in terms of the news and sentiment behind Brexit. But it said the Bank of England will probably be cutting rates. Well, that's obviously bearish a currency, but the Bank of England have said they'll probably be raising them. So when traders start to anticipate something that is got no basis in fact, that just shows you, how bearish the British pound is, and that's a real warning. There's going to be a rebound. Now we know speculator stops are very close. How do I know that? Well, people who sold up here bought their stops probably down into this zone here. These traders who sold here, probably mostly retail traders, have even closer stops. Okay, so you can have a lot of stops, and you just need the price to poke up and trigger them. And of course, when the stop is hit, they have to buy their GBP trades back and sell Canadian dollars. So the stop hit could be really big. Also, you get contrary traders who think the pound, like us, is now extremely undervalued, and they'll be wanting to buy as well. So that'll add fuel to the fire, hopefully. Now, for people who say, well, no reason to buy the pound, can't see any reason at all, keep this quote in mind. The worse the situation looks, the less it takes to turn it around. George Soros. It's very true. When you get bearish or bullish extreme, it sometimes needs a small trigger, sometimes no trigger at all. The bearish extreme or the bullish extreme just breaks. People exit the market, or traders who want to be contrary are coming in, and that causes the move up. Now, in terms of this trade, all we're going to do is use simple round number breakouts and stop behind second round number. It's very simple to show you how it works. We're going to draw a line there, straight through a round number. What I like about the setup is not only is the risk reward good, but it's very easy to understand why it's got good odds on it. So what you got, a round number, always important. Institutions very focused on round numbers in particular. And what you get is you poke at the round number. There's no sell orders here at all at the moment. Over here you did have some, and then we rebounded back above. But very often institutions just push it through to catch retail traders, then bring it back up. We all know that happens, okay? But this time, no poke through at all. We're just sitting above the round number. Draw trajectory. Basically, I've drawn it through the tail and the body. That body now should provide support. This body has gone above that body. So the open here. This open or market is running at the moment. It's 3 p.m. GMT, but we are trading above the previous open. Okay, so I just think the selling now is exhausted. Now I don't want to come in right here. I want to come in here. There. Why? Because that's another round number. It's 169. So what I want to do is let it go through the round number and see, after all the buy and sell orders collide, if we go up. And now to do that, I'm going to go 30 pips the other side of the round number. So the battle is over, and then hopefully it's concluded and we go up. Okay, so 169.30 in. In terms of stop, it needs to be back behind this tail. Initially, I'm going to put it quite wide, just in case of one, kind of prod more to the downside. So I'm going to be back from round number 167.30. Okay. Now, if we would get through 170, okay, then what I would do is I'd have it closer to the round number. So 170, so we've got above that level. You've got 169 behind. I would go 168.60, so just 40 pips behind the next round number. Okay, it's very simple. But this kind of round number breakout trading and trading your stops behind round numbers, actually, I just find extremely effective. And in terms of round numbers, I have full videos on them, on exactly what happens around them, which you can go and look up. So let's say we get through here, we're going to go long. We use a very similar strategy in GBP AUD, and we've already been triggered long. We'll go and take a look at that chart in a moment. I'm now hoping this chart, we're going to get the same. Where we're going to go to, could get all the way up back to the highs in my view, but if we get to 176, I'll be happy. Another round number. That would give a 5-to-1 risk to reward. Now, in terms of this kind of breakout method off a bearish extreme, if you're right, you're going to see a big move up pretty quickly. It's not going to hang around, hopefully, for too long, which means you can get your stop up, obviously reducing your risk, and hopefully, as prices travel north, you'll be able to lock in a profit. Even if it doesn't get fully to my target, it will retrace, in my view, a good proportion of the big move down. You'll see it all the time on charts. We get big, exaggerated sell-offs. Really good proportion is retraced, or all of it's retraced. You can look at my previous video, but market is way too bearish about the British pound. And from our point of view, we do not even think the odds of a hard Brexit are high. You can see the previous video on that. But what we're going to do now is just look at what GBP AUD is doing this afternoon. All right, just going to use chart farm member center for GBP AUD. Kind of a little bit of a different setup to GBP CAD. We had a little bit more confirmation. 3 candles here finding support, a couple getting above, and then this one here poking up. So I'm poking up again, and level on the weekend video at 182.30. Just a little bit of profit this morning at 182.70, but it's looking very bullish to us. I'm looking for a big move up right to that candle high due to the fundamentals, then possibly on to 194. And it's 3 p.m. now, so what are we doing in a GBP AUD since this morning? She's pressed up a little bit more. She's right on the round number. She can take out the round number, this 20-day moving average. That will then see a big move to the upside, in my view. So really, this one is again I think about 5 or 6 to 1 in terms of risk to reward. So for us it looks really good. We are looking at another one as well, which is GBP NZD. yeah, all the commodity currencies look weak against the pound, which I've discussed in previous videos. And actually, this one doing really nicely this morning. It's already got through 193. You can see our level of entry there, 192.10. This one again, a risk reward of around over 5 to 1. I don't know what it's doing right now, but I'm assuming it should be going up. Yeah, it's looking very perky. 193.51, so we're well clear now of the round number. So in terms of trading bullish or bearish extremes, okay, at the moment these are going okay. But yeah, if you get stopped out, it's just your risk to reward is so good. If you've got a 5 to 1 risk to reward, you only got to make one trade right to break even, and you should have a higher hit rate than that. Yeah, these sort of trade setups don't come around all the time, but if you look out for them, the real big sell-offs, the real bearish extremes or the opposite bullish extremes, you can make a lot of money, and you don't have to do anything complicated either. In terms of the breakouts that we're looking for, they're not even big levels necessarily. They're just confirmation breakouts through round numbers, and it's a great way to trade in my view. Hope you enjoyed the video and found it useful. We shall look at these pairs in future videos, no doubt. But that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.